Thank you for joining us this morning, Mr. Cragg. If I can ask you first of all, I'm going to throw you three ideas. European debt contagion. Spain is obviously the next concern. Number two, we have indeed the US, $14.2 trillion, very close to that debt borrowing ceiling concern. And of course, India being aggressive on interest rates, which may prompt China to do the same. All these mean uncertainty. How do you feel, and what are your clients saying? Are they nervous?
Good morning, John. Well, I would agree with you. I think the markets have quite a lot to digest. One broker eloquently put it to me, it's like the pig through the python. There's a lot to digest: inflation, higher rates, oil price, trouble in the Middle East, sovereign debt problems in Europe. So I think over the summer, we're into the difficult May period now. I would favor defensives. I think higher dividend yielding stocks, utilities, telecoms, and that sort of thing. However, I think going into the third quarter, a lot of these concerns will be in the past, or will be moving into the past, and we would probably get a little bit more aggressive at that stage. I think some of the stocks that have suffered from the tightening will begin to rebound. For example, China banks. China is now probably as cheap relative to the region as it has been for a decade. And even some of the consumption names as inflation begins to peak.
Is it set in May and go away?
I don't see a great correction from May, but I think it could trade flat most of the Asian markets over the summer period. But as I said, I would use this period to get positioned for a third quarter, fourth quarter rally. We still very much favor the domestic plays in Asia for the reasons I think you just mentioned, John. I would still be wary personally of the export sector, uncertain growth in the US and Europe. So we like playing the domestic story. We also think that most Asian currencies will continue to appreciate.
If I could mention Japan, Anthony, we last talked to you back on March 17th when you said, in fact, I would not be heroic, I would not be jumping in, we are holding fire on Japan. Have you seen any catalysts? Your main concern then was, of course, the nuclear fallout. Any catalysts so far to change your mind?
Not yet, John. As you know, since that interview, obviously the incident level was raised to the most serious nuclear incident level. So I think there's still plenty of concerns around. I think gradually you can look to re-enter Japan on a case-by-case, stock-by-stock basis. That being said, I think you have to adjust down your ultimate target price for Japan. So it may not leave that much headroom from where we are now. The Japan market now is only down about 5% year to date. So it hasn't necessarily factored in all the damage to the supply chain. But again, I think going into the third quarter, some of that supply chain damage in Japan, some of that production that's been disrupted will begin to come back on stream, and that could be another factor that make people feel a little bit better in the second half of the year.
We've mentioned rates. I do want to ask again, the Indian story again, they have been quite aggressive, surprising to most economists, in fact, a few economists, well, most economists, I should say. Now, China, it seems, are next up, obviously. Do you therefore see a very aggressive stance from China, today's Malaysia, Philippines, that now the Asia are going to say, right, we're going to get this bull by the horns and really deal with the inflation story and be aggressive and be ahead of the curve?
Well, I think what we'll see is a sort of FIFO effect, first in, first out. I think those countries who got onto the inflation problem earlier and proactively and aggressively will come out of it earlier. I would put China in that category. I would put India in the sort of dragging its feet category, which is why I think we're looking at inflation in India of close to 10%. It's closer to 5% in China, and I think at this late stage, as it were, India is having to put the brakes on rather rapidly. So I would much prefer China in the inflation rate scenario. I think it's been in the tightening phase, the austerity phase, longer, and I think it will come out earlier. We're already beginning to see some peaking out of inflation, particularly in food inflation in China.
Anthony Cragg, many thanks for joining us today from Denver, Colorado. Anthony Cragg there of Wells Fargo runs the Asia Pacific Fund. Now, up next.